Howdy there, folks. Welcome into today's video. We got a lot to discuss in today's video. We got some very important things that are going on in the market that are changing in a substantial way. Weightings for different indexes we got to speak about. Several different stocks to talk about. Opportunities in the market where opportunities might not be in the market, and many other various things. I appreciate y'all joining me as always, folks. And let's just jump straight into this. Thanks for being subscribed, by the way. So I want to start here with Mr. Gordon Johnson. Okay, Gordon Johnson. I thought this would just be a perfect place to start this video. Price wars in the auto industry equals coming bankruptcies. Exhibit 101, that people don't want to buy EVs. Ford just cut the price on its pretty amazing F-150 Lightning EV truck to $51,999 from $61,000 as of yesterday. A 16% effective immediately cut. This is not normal, okay? Gordon Johnson says people do not want EVs, okay? That's what he is claiming. All right, so let's fact check Mr. Johnson while our camera magically switches here, okay? And what do we find? Well, Tesla, the EV company, let's see. So they 10x the revenue here, then they 10x their revenue again, and now they just 4x their revenue, and over the next couple years here, it's going to be 10x again, because then they're going to be doing $200 billion plus of annual revenues. So we look like a 10x, 10x, 10x. All right, Gordon Johnson, I don't know what you're talking about, but clearly Tesla has no problem selling EVs. They seem to be doing just fine. What about recently? Well, they just crushed delivery expectations. 466,000 EVs they just delivered. I believe that was 80+% growth on a year-over-year basis. Gordon Johnson, whatever you're saying here, it doesn't hold weight. That's just a fact. It doesn't hold weight based upon what's going on with Tesla and EVs in general. And by the way, EV market share just hit a new record this past quarter. If I recall, over 7% of the vehicles sold were EVs, okay? And wait to see that number in 3 years from now, 5 years from now, 7 years from now. So the whole people don't want EVs, it just doesn't hold weight whatsoever. The equivalent of what Gordon Johnson just said is like saying, TCL has trouble selling smartphones, so people don't want smartphones, clearly, because look at TCL, like they're having trouble selling smartphones, okay? If other brands have trouble moving units and they drop price or whatever they do, okay, at the end of the day, doesn't mean at all people don't want Teslas, okay? Just because people aren't buying a TCL smartphone or a Lenovo doesn't mean they don't want an Apple smartphone, okay? That's the bottom line in regards to this. And what does the market think about all this? Well, the market clearly is not worried at all about what Gordon Johnson has to say, okay? Because then again, if the market was worried about what Gordon Johnson has to say, they would have been worried 5 years ago and plus many years before that, because Gordon Johnson's been bearish on the stock for literally as long as I can remember. So a minimum of 5 years, but probably longer. And he's missed out on the last 1,000% plus gain, if not 2,000+% gain in the stock. And it is what it is. Today we're up another $15,000 on good old Tesla Maestro. So Tesla just keeps rolling on through to earnings, and obviously earnings are in less than 48 hours from now. We'll come back to that in a moment. Now, there's a massive change going on in the stock market right now. The Qs are rebalancing, okay? And so, you know, I'll be honest, it doesn't make any dang sense, okay? It doesn't make any sense. So check this out, okay? This is fascinating. So Apple's going to basically be weighted a little less, okay? So they're going to ding Apple a little bit. But look at Microsoft's ding, okay? Microsoft, we're talking about 3 percentage points. Doesn't make any sense. Like, Apple and Microsoft are around the same year-to-date returns. They're around the same market cap, roughly. Like, to hammer Microsoft that hard and not hammer Apple, in my opinion, just doesn't make any sense. But hey, I don't own Apple stock. I don't own Microsoft stock, so I shouldn't really care. It doesn't make sense. Like, whatever these two they should have got hit around the same, but I don't know, man. Maybe somebody's playing favorites out there, something like that. Meta's getting hit a little bit. Nvidia's getting hit big, which, you know, it's performed so amazing. You kind of understand that. But yeah, and so a lot of stocks are obviously going to see kind of moves up. But basically, the Qs are trying to rebalance to kind of de-risk some of the big dog stocks. So Tesla, Meta, Nvidia, Amazon, Google, McDougal, Microsoft, and Apple are all getting hit because of this, essentially, okay? So it is something to kind of keep in mind out there. We'll see, you know, I don't know. Stocks have been holding up pretty dang good. That's what I'll say about that. Now, you might have seen this in the news recently, okay? Everybody's talking about AT&T stock. And the reason is AT&T just went I believe AT&T stock is down in the past 29 years, if I recall. 29 flip and flapjacking years. Now, I want to pull you guys up something very important. So this is since basically I got in the market around the end of 08 into 2009. And this is how Verizon stock and AT&T stock have performed since I got in the market back in the day, okay? And Verizon stock is down about 12% since then. AT&T stock's down about 55%. Now, if you take into account the dividends you received over that entire time, you should hopefully have a little bit of a positive return, but it's not going to be that impressive, especially considering what the market's done over that time and what countless great companies have done over this time, okay? Now, what saved me from AT&T and Verizon stock? Because those are two stocks that I've always been very well aware of since I got in the market in 08, 09. I've considered them many times, but what saved me from not buying those stocks to get caught into the biggest value traps of the last 15 years in the stock market for two very famous companies? I'll show you exactly what I looked at to keep me away from those, okay? This is it, the debt loads. The debt loads are what kept me away, okay? This is where balance sheet matters. Now, even back when I would look at these companies many years ago, they had ridiculous amounts of debt. And guess what? The problem just really got worse over the years, okay? And as of today, their debt load's sitting at over double what it was in 2010. They're sitting at $128 billion of debt. The market capitalization of AT&T is not even $128 billion, if I recall right now. So this just goes to show you, you know, if a company has an extremely bad balance sheet, even if they're making that recurring money coming in, like those debt payments are going to eat them alive. And it really also goes back to creativity in a company, innovation, and it's harder to have a creative culture, an innovative culture, when you're very debt-ridden and when you kind of have a monopoly on your industry. And this is something Steve Jobs spoke about many times in the past, or at least one time in the past. I remember specifically Steve Jobs talked about companies that get kind of like monopoly market shares and how easy it is for those companies to get very complacent, not innovate, not really move the ball forward. And I look at a company like AT&T and what have they done over the past 15 years, just to be quite frank, right? They haven't done a whole heck of a lot. Like, I remember they had the original iPhone deal back in like 2007. They were kind of the exclusive company to be with Apple's iPhone. And then that might have been their big innovation. The only other thing they've done is they've done some deals where they bought out some companies and then sold some companies. But ultimately, this has not been really a growth company, because at the end of the day, their business model was just, we're a huge cell phone provider and landlines as well. And so if you need a cell phone or a landline, you're going to have to come through us. And they got very complacent. And so that's the risk with a company that gets a monopoly type market share like an AT&T or a Verizon. This is what happens to those, right? And Steve Jobs preached about that, I remember, many times in the past. And it just goes to show you what ends up happening to a company like that, right? Fascinating to see something like that, right? Now, a stock that is certainly no AT&T or Verizon is good old Palantir, PLTR. This stock continues to roll up another 6+% today. 6+%, up another $5,500 in the stock just today in the public count. This stock continues to roll. Now, I'll be quite honest, in regards to Palantir, okay, there's absolutely, positively, no real reason why Palantir should have been up 6+% here today, okay? That stock is just on a roll right now. And it is just more and more folks are finding out about the Palantir story, taking it serious, and understanding the opportunity for this company for the next 5-10 years. And more folks are starting to invest in it. You have the run-up prior to S&P 500 inclusion. I think it's becoming more and more apparent as time ticks on that the company's going to get in the S&P 500. And I think some people are trying to front run that, right? Because that's going to probably happen either at the end of this year or beginning of 2024. So that's a dynamic that's not going to die down anytime soon. Now, if Palantir comes in, reports very nice earnings, we're 20 plus easy after that. 20 plus in the bank. As long as the earnings come in and they beat all their numbers, they need to beat revenue, they need to crush EPS, they need to beat margins, they need to beat everything across the board and have very strong commentary about guidance. They do that. We're pushing 20 plus, 22, easy after earnings, okay? And that's not even like, that's just child's play at that point in time, okay? No. Another stock that just continues to roll is Elf on a Shelf, okay? Elf on a Shelf is up again here today. Another high for this one, right? And I'm looking at Elf and, it's like, the gains are pretty insane. And it's like, do I go ahead and cash out of this stock? I mean, it's pretty amazing to put $7,000 into a stock and get $100,000 plus out of that stock. That's incredible, right? But even myself, I kind of look at it and I'm like, is this too much? And so I look at it and I'm like, dang, maybe I should cash out of these shares because look at the forward PE on the stock. It is rich, very rich, right? You know, you could talk about 50s and the 60s range. But on the flip side, then I go ahead and look at this, and my mind's changed. Okay, so they went from 10% revenue growth in that quarter to then 13% revenue growth in that quarter to then 26% growth in that quarter, then 33% growth in that quarter to then 49% growth in that quarter to now 78% growth in the latest quarter. Like that's ridiculous. I don't think I've ever seen a company's revenue line item strengthen that much quarter after quarter after quarter after quarter. So although on, you know, if you were to look at the forward P, it looks like, wow, that's rich. It's like 3 times, if not over 3 times what the market trades at. And then you go ahead and you look at that revenue line items, it's like, it's not that bad, man. It's not that bad. So, you know, Elf's one of those that I've always regretted every share I've ever sold of the stock, which I've sold most of my shares by far, obviously. I had nearly 10,000 Elf shares at one point in time. I've regretted every share I've ever sold. So then the day, I'm just letting this baby ride. I'd much rather, you know, than miss earnings, some sort of disappointing numbers, the stock goes down in the 90s or something like that. And it is what it is. I'd much rather hold through then than sell out of this and then, you know, the stock's 200 plus a year or two from now because they keep putting up these ridiculous numbers, which, I mean, they're showing no signs of slowing. They're only showing strengthening. Like, obviously, they're not going to be able to grow 78% a quarter every quarter. Like, that's unrealistic. But the numbers are ridiculous, okay? And so Elf is just a hold. I can't dump out of that one, okay? Meta. Now, Meta stock's about to move huge before their earnings, okay? And let me explain why that is in just a moment. But I mean, obviously the stock just continues to roll. We're up another $3,000 plus on Meta stock here today. It's extraordinary, just kind of the movement in the stock, right? From $88 back in the fourth quarter of 2022 to see where the stock is now, you know, pushing 310 plus. It's been quite a move. But Meta stock's about to move significantly prior to their earnings, and the reason being is what it's about to happen, and this is, okay? So I don't know if you guys follow me on Threads or not, but if you don't follow me on Threads and you use Threads, definitely, you know, follow me. If you don't know how to get there, go to my Instagram, okay? And my Instagram's linked in the description area. Check out my Instagram, and then you can go ahead and you can click the button for Threads once you get on my Instagram, okay? Which, by the way, if you don't follow me on Instagram, what the heck are you flipping flapjacking doing? Tesla and Netflix will report earnings over the next 48 hours, okay? Now, these stocks will move Meta stock. I can tell you that. These are also big weights in the Qs, big weights in the S&P 500. And at the end of the day, when it comes to Tesla and Netflix, they're seen as risk-on type stocks, right? Now, the way Meta's been performing recently is kind of in the risk-on territory. So in order for Meta to keep rolling into their earnings, right, which are still 1 to 2 weeks away, they need Tesla and Netflix to come through, report really good numbers, pretty good guides, and boom, and next thing you know, Meta's going to be pushing 350 going into earnings, if that was to happen. Now, if Tesla and Netflix get, you know, let's say these stocks go down 5, 10, 15% on earnings for whatever reason, then that's going to hurt Meta stock and will likely be under 300 going into Meta earnings, okay? And then it will really be dependent upon Meta's earnings where that stock goes from there. So that's an important thing to understand about this. These two knocked out of the ballpark. I could see Meta pushing 350 going into earnings, man. It's a possibility. So, but these ones matter in a significant way to Meta. They matter even to stocks like, yeah, obviously Amazon as well, okay? Now, next thing I want to show you guys that's very, very important, okay? This is S&P 500 seasonality, all right? Now, what we usually see is the second half of July, you usually see a drop in stock prices, right? And so if for any reason stock prices fall over the next week or the next couple of weeks, don't be surprised because that is kind of a usual seasonal pattern that we usually see stocks fall during this time period, right? Now, I have a little bit of a theory in regards to this on it, and if I actually see this as kind of a realistic thing, okay? And, you know, I saw this was put out at a few different places I saw this, and I believe it was on Twitter as well, okay? Now, what I've been continuously seeing, this is a whole different year in 2023. Every single time somebody shows one of these kind of like bearish charts, That's like why stocks are going to go down or why they could go down next week, next month, whatever. Every single time they've pretty much been wrong this entire flippin' flapjacking year. Now, why is that? My little theory is, if everybody sees this stuff, because the thing about Twitter is, and especially on finance, like it seems like even big money looks at Twitter. I'm not talking about just small money. I'm talking about fund managers, a lot of the folks that go on CNBC, a lot of analysts, they all use Twitter. So a lot of times these people see these same exact charts, and they think the same exact way. And so they make moves prior to that. And so it never actually comes to fruition, right? And obviously in just kind of a raging bull market like we've had certainly this year, right? I mean, every single time I see one of these things, it just ends up not being wrong. So the thing I always think about is I'm like, watch stocks go up over this next 2 weeks and just break everybody's brain because they're like expecting them to go down, right? That's all I think about, man. So it's a really fascinating market, and the best thing for you as an investor to do is just understand if you get some great deals over the next couple of weeks in stocks that you love and that you want to own, great, you can take advantage of those opportunities, right? But don't, sometimes people think they can try to outsmart the market and like, oh, I'll sell out of these stocks, last week or the week before, and then next thing you know, they have to buy those same stocks back at 5%, 10%, 15% premiums. And they're like, why did I just do that? Or they don't buy back in hoping it goes down and then it goes up even more and more and more and more. And they're like, oh, when can I do this? Okay. Now, I want to show you something absolutely mind-blowing. Okay. Absolutely mind-blowing. This, I believe that I saw this actually on Threads. And I was like, this is fascinating, right? It goes to show you if you had $10,000 invested in AMD back in 2015, right? What that amount amounted to over time, right? And it was 146,000, 304,000, right? 920, 376, as of recently, $700,000+, right? And obviously Lisa Su pulled off an incredible kind of comeback, but I think AMD is a story of retail investors, actually. And obviously what Lisa Su has pulled off at the company is just, I think it should be applauded forever. I mean, she turned that company from, it was less than a $2 stock. It was a joke. No one respected AMD into one of the most respected companies in the world in literally less than 10 years. Like, to do that in less than 10 years from your joke stock, no one cares about you, no one cares about your company, to getting to a place where you're one of the thought leaders in the overall financial markets, and like it's incredible what she's pulled off at AMD, right? And obviously what Jensen's done at NVIDIA over time has been amazing as well, right? But it's really fascinating because it's a story of retail. Because I remember talking about AMD stock a few times on the YouTube channel. I've been on YouTube for like 100 years if you didn't know, okay? And I remember talking about AMD stock, this is even back in like, oh gosh, maybe 2016, 2017, okay? And I remember there was actually a really strong investor community around AMD, and I wasn't really bullish on the stock. I wasn't bearish either. I was kind of like middle ground. And it was fascinating to see how strong like the retail community was around AMD back in those days. And so I just think, a lot of times retail gets disrespected as they don't know anything. I can tell you, retail investors are really freaking smart, okay? Some of these retail traders that come in and gamble around stocks and do the AMC and GameStop stuff and all that crap, okay, and the Wall Street bets, that's a whole different category, okay? But the real retail investor community that I've seen over time, these are some of the smartest individuals you ever find, okay? And I've seen these folks form strong communities around stocks like AMD in the past, around stocks like Tesla, around stocks like Palantir. I see it definitely even in a stock like SoFi, right? And so I think retail deserves a little more respect than I think retail gets out there. That's what I'll say about that. Well, anyways, folks, I got to go because I hear the garage door opening, and that means my delivery's here. $13,000+ of six-figure awards just arrived at the house, folks. And so, yeah, very exciting. A lot of people hit new milestones, new records, 6 figures, 7 figures, plus in their portfolio, so the time has come. And, yeah, if you're looking to join us and apply to join my private group, check out the pinned comment down there. You can fill out an application. We can see if you're a good fit for there. If not, I appreciate you joining me as always. Thanks so much, folks. Much love, and have a great day.